The CEO of Zillow just announced a huge warning for first-time homebuyers out there. Stick around. In this video, I'm going to tell you why. Hey, what's up everybody? It's your mortgage expert, Brian McCauley here, and this announcement from the CEO of Zillow has got a lot of first-time homebuyers scared. Why was this warning issued to them? Well, issued for a few reasons. We all know the housing market is a little clunky. It's trying to thaw itself out. But the warning to these first-time homebuyers was buy now or miss out. Now, it sounds counterintuitive to what most first-time homebuyers are thinking. Hey, interest rates are in the 7s. I care a ton about affordability. I care a ton about stability, and I care a lot about competition. So what a lot of first-time homebuyers are doing is saying, hey, why are you gonna issue a warning to me, which is buy now or miss out forever? I don't wanna make that payment. I don't like that rate. I don't have a lot of money in my pocket. I'm just gonna wait for better times. So the warning from this CEO is really wrapped around the fact that even though interest rates are higher, even though the monthly payment is higher, because the housing market has not thawed itself out and it's not fully back to warm/hot yet, first-time homebuyers, you guys have an opportunity. I want to go back and give the example during COVID. So what happened when interest rates dropped was the demand from the street, meaning all the consumers, it just went 10x. And the problem is you had so many people going after the same houses. The prices were spiking through the roof. But anybody out there, first-time homebuyer or not, but first-time homebuyers traditionally are the ones that are limited on experience, limited on funds, and so they're usually the ones that need the most help. When a market gets that hot and it gets that insane, you have so many people making offers and doing the same thing, the first-time homebuyers are the people that need concessions or help are the ones that get pushed out the fastest, because their concept is, well, I want my monthly payment cheap. I don't have a lot of money out of my pocket, so I'm just gonna wait till things get better. The first thing I'm gonna wait on is interest rates to drop. That will help me when it comes to my monthly payment. It'll make it cheaper. That is correct in theory. What a lot of people don't pay attention to is the other side of the coin. So what happens when interest rates drop 1 or 2%? Not only do the monthly payments come down a tad, but everybody else has the same idea. And so you've got prices of homes and demand on these homes just going through the roof, 10, 20% higher than what they were prior to rates dropping. And so your warning shot to all the potential first-time homebuyers out there is, a lot of people need concessions. And what I mean by that is they need help with the closing costs, right? Maybe they don't have all the money for the down payment. They don't have all the money for the closing costs. They don't have all the money for the repairs. They try to work out a deal with the seller that says, hey, I'll buy your house at this price, but I'd like to use some, seller concessions and negotiate maybe $10,000, $15,000 in the contract so I can save myself, some money on closing costs and save money on repairs. And so why that sounds good in theory, the challenge that's been put out there for first-time homebuyers is, hey, when the market heats up, any and all concessions or closing costs or credits that are available right now for first-time homebuyers will be gone. Not only will they be gone, those potential homebuyers are going to have to probably overpay for the property, and they're probably gonna have to spend additional money out of their own pocket, which makes it much more expensive for that person, because not only do they have to pay where the interest rate is now, top dollar for the house, don't have to get any closing costs from the seller, because obviously the seller has 10 different options, so they're not going to concede. And then sometimes to even lock the property up, because the demand is continuously increasing, that first-time home buyer has to go above and beyond the asking price, and they have to pay cash for the delta and the extra. So the thought behind this is, hey, first-time home buyers warning, even though things are expensive and it costs you more in the monthly payment here and there, the trade-off is if you wait, the cost of waiting will actually get more expensive. First-time home buyers are being, for lack of a better term, targeted in this statement from the CEO of Zillow, because they want to make first-time homebuyers aware that there are a lot more things in the formula to make a successful first-time homebuyer than just a cheaper rate and payment. So what they're saying is, hey, if you don't look to act now, you're probably going to miss out on a 2 or 3 year run unless you've got a whole lot of money. Most first-time homebuyers don't have a lot of money, and they don't have a lot of experience, and so if they don't have somebody in their corner able to navigate this and help consumers, what I call forward think, right? What's their move, but what's the economic move that's going to change that piece, and then what's that going to do to cash out of pocket and all these things, so it become a domino effect. And as things continue to get more expensive, first-time home buyers kind of pull on the sideline because it's a little bit too expensive to them, hoping for everything to cool. The challenge is the rates cool and the payments cool. Everything else on the other side of the fence starts to jump up quickly. Inventory, prices of homes, the amount of people that obviously want to buy and or sell. And then for your first-time home buyer, the best thing that a first-time home buyer can do outside of getting a great agent and putting together a plan is go through all the financial components of buying a house and getting a home loan. It's not just about rate. It's not just about payment. There are a lot of other details that they want to make sure that first-time home buyers are aware of. Which again, the cost of waiting can be more expensive, especially if somebody maybe only has 25, 30, 40 grand to their name. If they've got to spend 10,000 of that on the down payment, but they've got another $10,000 in closing costs, that can be a lot of their money. But let's say they spend $10,000 for the down payment, and in this market right now, where it's a little bit softer, they can get the seller to pay for the $10,000 in costs. Now all of a sudden, instead of bringing 20K to the table, they can only bring 10K to the table, which obviously for a first-time home buyer, $10,000 is a lot of money. So these are things that they're trying to design to help people understand and kind of navigate the roadmap of the announcement to first-time home buyers, which is, it's probably not gonna get any easier. There's some down payment assistance programs and things out there, but first-time home buyers need the most help on all those areas to get over the hump, to get started and become part of that home ownership, crew out there that's trying to find a way to navigate the tough market, find a way to navigate the inflation piece, but with the understanding of waiting isn't always the best option. Sometimes, but it's not always the best option, because when you wait and things come down, everybody kind of has the same idea. And so just getting a cheaper interest rate and a cheaper payment may not be the best strategy and structure for you as a potential first-time home buyer out there. You have to look at the cost of the house and the concessions and the overbidding and coming cash out of pocket. So all these things you need to be aware of. I've seen them 2 or 3 times on 2 or 3 different cycles. And so this announcement and warning shot from the CEO of Zillow, I think, is good. I just tell everybody, and I'll leave you with this. If tomorrow they flip the switch and interest rates were at 6.5, ask yourself, what does that look like? How much does it lower my payment? Okay, great. What if they flip those 6.5 rates to 5.5? What does that look like? Okay, now on the flip side of the coin, if they moved rates to 6.5 tomorrow, outside of the cheapening of the payment temporarily, what would that do to all the buyers out there that are waiting? They would perk up, come off the sideline, start to look at houses, start to make offers, and within a 30 or 45 day window, you'd have this surge of people, surge in prices, no concession or help from the other side, and it would start to squeeze people out. Now run that back again one more time at 5.5, it would be to the moon with the amount of people that need help, have been waiting to get qualified, because some of these higher interest rates people can't qualify with it. But even people that can qualify and been waiting, everybody's waiting. If they try to time it all at the same time and rates are at the bottom, it's gonna make those home prices go up 25%. So for you out there as a consumer and a potential first-time home buyer, it may be better to consider, especially if you need concessions, look at picking up a property right now, just stomaching the extra couple $100 a month over the next 12 to 18 months. And then when rates drop, refinance from the property you already own. Don't have to deal with all the drama in the street. At that point in time, you can get obviously the rate and the payment that you want, but the lower the interest rates and the higher the demand, that's just gonna push the prices of the home up. And so if you buy a $500,000 house in 24 months with the demand, it's probably gonna be up, I would guess, minimum 20 to 25%. And you're gonna make a lot more money on the upswing, and that they'll deal with all the drama than if you waited just for the rates to get to the bottom to save you a little bit in the payment. So there's a game out there in Dallas, and there's a warning sign that's been shot out there to everybody, which is, hey, now or never. So if you're a first-time home buyer out there, take this into consideration. Get with your agent, think about short-term and long-term, and have them help you and educate you on what the best decision for you is, not only now, but in the future. So listen, I hope you found this video useful. If you did, do me a favor, like, comment, subscribe, or even share it with somebody that you know that could benefit from this information. If you want to have a conversation with me about buying a house, refinancing a house, getting pre-approved, or just want to have a conversation around your financial position, do me a favor, call me, email me, text me. I'm always here for you. Until next time, stay tuned.